Hey, deep divers, welcome back. Today, we're jumping straight into the latest financials from Universal Safety Products. You might know them, actually, by their old name, Universal Security Instruments. So our mission here is pretty clear. Take all this detailed info from their Q4 and full fiscal year 2025 results, plus some big strategic news, and, pull up the key takeaways for you. It's not just about the numbers themselves, it's really about getting the why behind them and sort of understanding what these big moves mean for where the company's headed.
Exactly. And I think the core focus really is exploring how universal safety products manage such a really significant turnaround. I mean, going from a net loss to a net income in both the fourth quarter and the full year ended March 31st, 2025. That immediately makes you ask, okay, what specific changes drove that kind of shift? It's quite dramatic.
It really is. Okay, let's unpack those headline numbers first because they really grab your attention. For the fourth quarter, the one ending March 31st, 2025, sales jumped $170,152. That's a 40% increase, 40%, up to over $6.2 million from about $4.4 million the year before. And here's the really interesting part, like you said, the bottom line. They went from a net loss of $776,671, that's $0.34 per share in Q4 24, to a net income of $1,302,551, or $0.56 per share in Q4 25. That is a swing of over $2 million on the bottom line in just one quarter. That's quite something.
Huge. And that positive momentum wasn't just a blip. It carried through the whole fiscal year. For the full 12 months ending March 31st, 2025, sales were also up substantially by over $4 million. That's a 20.7% increase, taking the total to $23.56 million compared to $19.5 million the previous year. So seeing that positive trend, short-term and long-term, that's a strong signal. And the full-year net income turnaround is just as compelling. They went from a net loss of almost $700,000 or 30 cents per share in fiscal 24 to a net income of just over $500,000, $500,684 or 22 cents per share in fiscal 25. So yeah, they flipped from red to black across the board. Pretty impressive.
Definitely impressive numbers. So we see the improvement, but what were the actual strategic decisions? What factors really fueled this? What was the biggest piece here?
Yeah, the biggest piece, without a doubt, was a major strategic move. The company closed the sale of its smoke alarm and carbon monoxide alarm business. They sold that along with some other assets to Fit Electric Company. That deal officially closed May 22nd, 2025.
Okay, so a huge divestiture, selling off a core part of the business. How did that specifically translate into the income numbers we just talked about?
Well, the boost in net income for the full fiscal year ending March 31st, 25, it really came down to two main things. First, yes, they did see an increase in sales to retail customers in the product lines they kept, so some operational improvement there. But second, and this is pretty significant, they recorded a big income tax benefit. This came from reversing part of a reserve they held for deferred tax assets. And that reversal was triggered directly by the gain they made selling those assets.
Okay, hold on. Deferred tax asset.
Yep.
It's like a future tax break the company expected, right?
Exactly. Think of it like prepaying your taxes in a way, or having credits you expect to use later. By selling the assets and realizing a gain, they were able to effectively unlock some of those future tax savings now. It gave their net income a very significant immediate boost.
Got it. So a big chunk of the profit improvement came from that sale and the associated tax accounting.
Yes. Which, it cleans up the books nicely, but it does make you ask, okay, how much of this new profit level is sustainable? How much is ongoing operations versus this one-time event?
That's a really important question. And the source material also mentioned that there were some revisions. They increased the net loss reported for the prior year.
That's right. They did record some revisions that made the loss in fiscal 2024 look a bit worse in hindsight, which in turn makes this year's turnaround seem even more pronounced by comparison. It widens the gap, visually speaking.
Okay.
But beyond just the profit numbers, the immediate impact of these moves was also very tangible. The company announced it filed its annual report, the Form 10-K, on July 28, 2025. And that filing specifically cured their previous non-compliance problem with the NYSE American listing standards.
Ah, okay. So getting back in good standing with the exchange.
Exactly. And if you connect that to the bigger picture, it shows a company actively addressing not just its finances, but its credibility, its stability with the market, with investors. That's huge for their long-term health, beyond just one quarter's profit.
Right. That move to fix the compliance issue, it definitely signals a shift. Okay, so we see the income statement impact, but to really get a feel for the health and, I guess, the new direction of universal safety products after these big changes, we need to dig into the balance sheet. That's where you really see how these strategic moves have, well, reshaped their whole financial structure.
Yeah.
So looking at that balance sheet comparison, 2024 versus 2025, what jumps out to you first? How are these changes showing up in assets and liabilities?
Well, the balance sheet, it tells a very clear story. It looks like de-risking, simplifying. On the asset side, right away, you see cash. It jumps significantly from only about $65,000 in 2024 to nearly $350,000 in 2025. So much better liquidity there.
Get more cash on hand.
Then look at inventory. It dropped quite a bit from about $4.75 million down to just over $3 million, which, makes perfect sense if you're selling off major product lines. Less stuff to hold.
Right. And then we see new lines popping up directly
Yeah.
because of the sale. Yeah.
Exactly. On the March 31st, 2025 balance sheet, suddenly you have assets held for sale listed at almost $1.7 million. And that deferred tax asset we talked about, it's now quantified on the balance sheet at $361,000. Both of those lines were zero the year before. Direct results of the deal.
Makes sense.
And what's also pretty stark, property and equipment, it was about $191,000 in 2024. In 2025, zero. Gone. Again, clearly showing that asset divestiture.
Wow. Okay. So stripping down the asset side, what about liabilities? How are they managing things through this transition?
Well, you see a big jump in their line of credit from Factor. That went from about $769,000 up to over $2.1 million.
Line of credit from Factor. Remind us what that is.
Sure. It's basically when a company borrows money using its outstanding customer invoices, its accounts receivable, as collateral. A factoring company provides the loan. The increase here might suggest they're leaning more heavily on those receivables to manage their cash flow during this period of change. It's a common tool.
Okay. So using receivables to get cash.
Right. And at the same time, their regular trade accounts payable money owed to suppliers that went down from $2.37 million to about $1.1 million. But then there's another new line item, accounts payable held for sale at about $1.15 million.
So those are the bills related to the business they sold off.
Precisely. Liabilities specifically tagged to the divested part. So you see all these adjustments happening as they sort of reconfigure their debts and supplier relationships.
Makes sense. A lot of moving parts. And the bottom line for shareholders through all this, the overall health.
That's the crucial bit. You see a positive change in shareholders' equity. It increased. Went from about $4.66 million up to $5.16 million.
Okay, that's good.
And tied to that, the accumulated deficit, that's the running total of past losses, it actually reduced. It improved from a negative $8.25 million to a negative $7.75 million. So putting those together, it definitely signifies an overall improvement in their financial standing. A step towards a healthier balance sheet, for sure.
That positive move in shareholder equity, that's got to be a key signal, right? Shows improved value, more stability.
Absolutely. It's a very positive sign for investors and the market.
Okay. So given these pretty significant balance sheet changes, the divestiture, the swing to profit, how does this set them up now? They say they want to continue with their other product lines and look for new opportunities. What does the path forward look like?
Well, yeah, their stated plan is to keep marketing the product lines other than the smoke and CO alarms they sold, which suggests, a strategic narrowing of focus. They're likely aiming for a more streamlined business, maybe one they feel can be more profitable or manageable.
Right, focusing the portfolio.
Yeah.
But what are the big external hurdles or factors they need to watch out for now with this new, leaner structure?
I think a really critical operational detail, and it's mentioned clearly, is that all of their remaining products are imported, specifically from the People's Republic of China.
Ah, okay.
So that means their ability to sell those products competitively really depends heavily on tariffs, import duties. That's a huge external factor for this kind of business model. Tariff policies can change, sometimes quickly, and that can directly squeeze their profit margins. It's something they absolutely have to navigate carefully.
Yeah, that's a constant uncertainty these days.
Yeah.
And beyond just managing the current lines, they also mentioned exploring other business opportunities to drive value.
They did, which indicates, a forward-looking strategy. It's not just about managing what's left after the sale. They seem to be actively looking for new avenues for growth now that they've sort of reshaped the company's core.
Makes sense.
Yeah.
Gotta look ahead.
And it's maybe worth remembering, this company isn't new. They were founded way back in 1969. Universal Safety Products has, what, over 56 years of history developing safety and security devices. Now, they're primarily a distributor after the sale, but that long history, it suggests a certain resilience, maybe an ability to adapt that's gotten them through market changes before.
That's a fantastic point.
Ah,
56 years is it's practically ancient in some business sectors. It really does speak to maybe a core adaptability, doesn't it?
it could, yeah. Time will tell how they leverage that experience in this new phase.
Right. Well, we've certainly covered a lot of ground here, a real deep dive into this financial transformation at Universal Safety Products, from major strategic divestitures to those balance sheet shifts and that dramatic swing back into profit. It's just a fascinating case study, really, in how a company navigates pretty big changes to try and boost the bottom line and fix compliance issues.
Yeah, what's really compelling, I think, is seeing how quickly a major asset sale like that can reshape things. The financial profile, the strategic direction, moving them from loss to profit, getting compliant again. But it also sets totally new conditions for how they operate going forward. Much more focused now.
It really does. And maybe the big question we're left with, something for all of you listening to think about, is this. In today's world, with markets changing so fast, how does a company deliberately shedding a core part of its business reshape its whole identity, its future growth path? Especially when you've got those big external pressures, like the tariffs we mentioned. What new doors open when you strategically narrow your focus like this? And, maybe just as importantly, what challenges stick around?